Hello, agents. Hello, everyone. So today we're going to discuss the joint life options in the immediate annuity. And what a joint life is, two lives. You can guarantee income for as long as either one is alive. So that's really great. And let's jump into it. Not a lot of people know about the joint life option. Most are familiar with the single life. So here's the joint life options in the single premium immediate annuity. So the first one, whoa, what's going on here? The first one is full joint and survivor lives only. So first death, full payments continue to the second annuitant, and at the second annuitant's death, it ends. So if they both, God forbid, go in a car accident within a month, the money's all gone. Or if one dies early and the other one lives to 100, it'll still pay. So that's the full joint life only. There's no guarantee except for the two lives. As long as one person is alive, it will guarantee the payment on that annuitant. So the next one we're going to look at here is the full joint survivor with period certain. And what this says is it will pay for as long as either is alive again, but no less than this period certain option. And that option can be from 5 years to 30 years, dialed in shortly, 17 years and 6 months. We can dial it into anything you want. The cool thing about the joint life with Refund is it's working off two lives, so that period certain gets, it's easier to buy the long-term period certain, say a 20-year with them, without reducing the initial price, right? The initial payment you're going to receive, because the longer the guarantee, the lower the initial payment may be, or will be, because you're doing more guarantee, right? You're buying more insurance, so it's a little more expensive, so you get a little less money every month. So that's the full joint life, meaning 100% of the income continues to the beneficiary, and not the beneficiary, but the joint at the time of the initial death. Next is the full joint and survivor with installment refund. And what this says is it'll pay again for as long as either client is alive, the joint annuitant or the irregular annuitant, the owner annuitant. But if either of them die early, or if they both die early, it will pay whatever is not been paid out of the premium. So if they put 100,000 in and both of them die before the 100,000 is paid out, it'll pay out the 100,000 in payments to the beneficiary. But remember, as long as one of them's alive, it'll still pay the full payment for as long as that person's alive, well after the initial premium has been used up. And next will be the full joint survivor with cash refund, same as the installment, only that if the two die without using all the premium, a lump sum difference will be. So if they died and only used 70,000 of their 100,000, 30,000 goes to the heirs instead of that monthly payment, whatever it was. And again, if they're alive past the time the initial premium has been used, it will continue to pay. Either one of them has to be alive, and it will pay 100% of the initial payment to them. And again, these are immediate annuities. They start within 1 month to 12 months. Most people start them in a month. Right after the deposit hits the company, 1 month later, these checks start coming out, and they won't stop until both are passed away. The next is a reducing joint and survivor. So let's say you wanted a little more bang in the beginning. What you can say is that you want the payment to reduce by a certain percentage point. So you could say, hey, I want, as long as the primary, say the male, is alive, you want that to pay for as long as he's alive at 100%. But should he pass away, expenses will be less, certain costs will be less. So it can reduce, say, 25% to the surviving spouse. So that's what will happen at the first death. It will reduce the payment. Next is a joint and survivor payment reducing on the joint annuitant death. So you can also do it conversely. So let's say the owner wants it on the secondary person. So you can have it on the secondary person. When that person dies, it reduces to the first owner. So you can die. It's basically the same thing, only you're picking which one you want to have the reduction on. So if there's a bigger expense for one person, and it's okay for it to reduce. But again, no matter what happens, it will pay for as long as either one's alive, but one of the payments may be reduced. Next, it is first death. It'll just pay at the first death. So whoever the first one is to die, that's how that works. Yeah, so that's how that works. And you can also put period certains on all those reduced ones as well. And if you do, it may not reduce the payment till after the period certain. So if you say, I want a 75% survivor, but put a 10-year guarantee, and the first person that died was in 5 years, it'll still pay the full payment for 10 years and then reduce. So it gets a little more confusing on those. But you can do these joint. Let me get back to this. You can do these joint and survivors with male, female. It doesn't matter. You just have to price it that way and ask for the quotes that way. Usually it's male, female, but I've also done father, son, mother, daughter, all that type of thing. Anything like that. You can have partners, all that stuff's being quoted. So as long as there's 2 lives that you want to protect, you can use the joint and survivor at 100% or at a reducing amount for that. So here's some disclosures. And remember, premium tax states will have a lower payment to begin with because the state takes a little of the premium up front. It's not a big difference. Get the quote on those and all that good stuff. And I'm trying to think if I'm forgetting anything about the joint. Not really at all. So yeah, that's good stuff right there. The joint survivor, not very well known, but it can be used. And I think it's really great because, it gives you that guarantee of like, hey, I need this $2,000 a month to live on, but God forbid I die. I want my wife to get it or my husband to get it or my best friend to get it, whatever it is. It will pay for 2 lives, not just 1. So it's a good guarantee. And people, they say, people age 65 right now, a couple age 65, the chances of one of them living into their 90s is like 25%. It's pretty good. 1 in 4 will do that. So if you want to protect on the longevity side, use the joint and survivor, use the immediate annuity if you need immediate income in the next 12 months. So if you need to be shown these, if you're looking for income and you're not being shown these, go ask about them. They're really important. You may not like it because you got to give up your, account to the insurance company, but it also offers an enormous amount of peace of mind because you can never outlive the money no matter what the environment does. So anyway, any questions? 800-373-9697. Agents, YouTube, and LinkedIn for the most up-to-date information. Thanks for watching. Hope you're all having a great day. Take care. Bye-bye.